Jeff, what I'd like to dive into right now, one of the things that we get questions about all the time, and I know you do as well, and I get a lot of comments sometimes on our, some of the like on the podcast that we recorded, and people telling us, and even other lenders and realtors and people in this business that say, "Hey, you guys you can't do vacation home and second home financing when you're using them as short-term rentals." And we know that not to be true, but can you talk a little bit about that? And so that people that are wondering, well, are you allowed to do that? Can we talk a little bit about that and the rules that Fannie and Freddie have around that, and where it would be applicable, and why some of those other professionals may think that we're not allowed to do that?
Yeah, it constantly blows my mind how much misinformation there is around this topic, around this opportunity. In fact, the phone call that I just had 30 minutes ago with a lady interested in buying a lake house, she told me, and she's a realtor, her lender in this scenario where she wanted to buy this lake house in this destination area, she was going to have to put 20% down because they were going to not only enjoy it, but also utilize it as a short-term rental. So it's something that repeats itself on a common basis, a consistent basis. So yeah, to dispel all the misinformation, the rumors, Fannie Mae loves the idea on a second home occupancy loan that you're going to have a borrower that can fully qualify for absorbing this proposed PITI payment in their debt to income ratios without any consideration for the income that it may generate or it could generate. And then, to have an ability to supplement their own ability to repay that mortgage, they love the idea. So to kind of summarize, and there's no quote out there on this, but I think they would say, hey, let's broaden our policy. Let's make it as liberal as possible, so we don't put people in a position where they feel like they're committing mortgage fraud.
Yeah.